million in a year on an annualized basis. That's a 12-year low. Poor earnings reports from Walmart and Home Depot earlier, and the Dow and the Nasdaq are in sell-off mode. Look at the Nasdaq, down 200 points. Fortunately, Michael Lee is in New York, and he's sitting right next to me. Michael used to be a super bull, but I got a suspicion you're sounding more and more like a super bear these days. But before you get into your analysis, tell me what you think is going on the market today with this China, Russia, Biden news.
You know what? Not enough. Not enough. You listen to Rebecca Colfer, who's been a guest on this program.
Yep.
Every time they war game this out with Russia, it ends in a nuclear holocaust. And so to touch on what Pete Hegseth was saying, we want Ukraine to win. We want to support them. It's a terrible crisis. Vladimir Putin's a bad man. But do we want to go to nuclear war for Ukraine?
So that unease is part of the sell-off today?
You know what? I don't think it is, but it should be.
Okay.
This is becoming a real risk of a drawn-out, terrible war, a war where there are no winners.
You say the market, and I read your stuff, market has become disconnected with reality. That sounds very bearish to me. Make your case.
Well, Stuart, I was a Super Bowl when you have growing earnings, expanding economy, expanding liquidity.
Yep.
We have declining earnings, decelerating economy, less liquidity, a tightening Fed, less accommodative Fed. Okay, the lowest quality stocks, the YOLO stocks, the meme stocks, which have been the leaders of 2023, they should not be going up in this environment. I suspect it's more of a short squeeze than a bottoming process in the market. And I think the saying goes, don't fight the Fed. Well, the market is fighting the Fed very, very hard. And as a result, the Fed is going to have to fight back. The Fed always wins. So the longer you fight this, the longer we wait for this inevitable recession that's driven by the Fed, the worse it's going to get.
Ouch.
So I would be defensive. And if you own a lot of these high-quality tech names that got destroyed, like a Facebook or a Google or a Tesla, and you were looking at them just 6 weeks ago at like half the valuation, maybe now you sell a little bit. Okay, and look to buy some back if we get another sell-off, or look for some of these other names. But I own the defensive sectors: staples, utilities, healthcare.
I'm buying 6-month Treasury bills and getting 5% yield. Not
Exactly.
bad, not bad. Mike Lee, thank you very much, sir. Always appreciated. All right, Ashley, come on in, please, because you've got the headlines from the markets. Start with Home Depot, please.
Yeah, Home Depot down big today. Look at that, 5.5% after they missed earnings expectations. Your